using the banking system to your benefit. That's what it's there for. It's used there for the banker's benefit too. They make a large amount of income on it, but let's think about the tools that you can have to sit down and help you as an individual. We talked about the Fed. The Fed runs this whole aspect. The power of their tools is so big that they don't even see the impact on the economy almost for 2 or 3 months sometimes in a process. If you have an action on the Federal Reserve in the process, you'll see the reserve requirement. It goes through and it takes 3 to 6 months to have an impact, but they can have almost an immediate impact when they're selling things or they change things at the discount window. In other words, where they loan money to a bank. So they can have changes that way. But a lot of times, who's responsible for the economy when the economy goes flat and everything else? Is it the Fed? Sometimes the Fed keeps the cost too low to borrow money, but if they raise the interest rate, then all of a sudden they stifle the economy. There are a lot of times in a no-win situation. Raise the interest rate, all of a sudden they reduce the amount of money out in society. If they keep it too low, then you have the risk of inflation. So you have to walk this super fine line in the middle to keep the economy right where it is. Otherwise, Congress will get all upset and they may not approve them next time around. Not that they care about that because they're doing the right thing, whatever that is. Okay, so banks, they divide up portfolios of mortgages, they sell them. When you sit down and you get a mortgage, it's pretty common that you go and you refinance your house or you finance your first house, that literally that bank sits down there, they have your money, and then 2 weeks later, they sell it to somebody else. So you sat down and you mortgage with Wells Fargo, and all of a sudden you have Tom and Joe's Home Mortgage Company is servicing your loan. Say, who's Tom and Joe? Well, hey, I'm Tom. Give me your check and I'll send you. It's not quite that bad, but it really is a matter of in 2 weeks. It's very common to have the mortgage that you dealt with the banker, that they auction off in the big block to some other person you never heard of. And because the other person doesn't have that retail access and they don't really want it. They got the banks for that. Everybody wins, they make money in the process. So they divide portfolios of mortgages up and they sell them to with mortgage-backed securities in the process. You'll see a lot of them in the process out there as you go through things. There are things called housing bubbles. And housing prices get inflated. It's a seller's market, and also the economy goes flat and all of a sudden the houses flop and they drop 20% in 1 year. You'll see those things, we call those things bubbles. In this case, it's a housing bubble. So you'll see different aspects of it. When we have the last major housing bubble burst, you can buy a house as a foreclosure where the bank comes in because the people aren't making their payments and they foreclose or take over the house. They sell the house out from underneath the people occupying it. It is an ugly and difficult situation. The people are angry. They sit down there, they let the house decay right in front of them because of the fact they're angry with whatever in the process. Or sometimes they have what they call a short sale, or actually you can come in and bid on the property and go through and buy something and pay off the loan, and the people lose all the equity they had in their house, but at least they don't have to go bankrupt in the process. So there's different things that happen in housing bubbles. You'll see different aspects out there, but overall now we have insurance to protect the banks, so the bank will still be there in the process once it's all over with. Typically, it's a federal insurance policy for a bank, and they'll insure all the deposits up to $250,000. Once upon a time, I had a job where part of my job was to go through and invest money, typically in the millions of dollars, and I would have to go shopping at different banks to see which one had the best interest rate. I would buy different types of CDs. I would buy some federal securities in the process as well. I had to watch the threshold of how much the bank was insuring the deposit, because I didn't want to go over, because if the bank went belly up, then we would never get our money back. So you have to watch this in case you have some loose change in your pocket, a mere $250,000, that would go to this bank over here. Be careful not to go over, because you may have to open an account in another bank as you go through. I know all of us have that same problem of just having 4 or 5 banks that $250,000 a piece. So that being said, you have the FDIC. You'll see these things on the door when you walk in. In S and L, you're going to have the SAIF, and a credit union, you'll typically see the NCUA. It'll say that they're insured by those different aspects. We do a huge amount of our banking today on electronic fund transfers. The slang is EFTs as you go through, and pretty much it's Venmo's based upon this. You're transferring money back and forth. Also, banks, they have credit cards they'll issue, but they also issue a debit card, which really is the same function as a check. Your debit card really functions as a demand deposit system as you go out there. And sometimes you have the smart cards. Some people use them. They have a chip in it called the RFID chip, and you put it in there, and that's a chip they use. And they had problems with them initially, but they really refined them a lot. Once upon a time, you might have somebody behind you in line, and they can sit down there and scan your RFID chip and use it for you, but it's on their own and spend money for you. Nowadays, hopefully they've stopped that, but who knows, people are hacking so much as you get out there right now. So there are credit cards, they help you pay for products. Literally, some people are talking about embedding them in people's skin. So you can sit down there and just wave it. One guy was demonstrating, he was giving the cashier the finger. This finger over here is a safe finger, but he had a chip embedded in his fingertip, and he was waving it, paying for things that he wanted to with his finger. He got a big charge out of it, of course. I knew you were waiting for that. So online banking is really big. It allows you to do a lot of different aspects in banking, but you have some security aspects of it. Keep in mind, we've talked previously about the market that's out there now for people doing online fraud. By the year 2025, we're estimating on the planet Earth that the online criminals will be making more money than the entire world drug trafficking that we're doing in this year. So that being said, that speaks hugely because online banking can be tapped into pretty easily. If you're involved in other countries, if you're involved as a business, you may have to get a line of credit. Typically, you're in business for 3 years. They want to make certain that you sit down and have a long-term relationship with them. And you get a line of credit where you can sit down, and it's a promise by the bank to pay the seller a certain amount if certain conditions are met in the process. Sometimes you get a banker's acceptance. This won't be in our test, but I want you to know about them in case you go into business. That's why it's important that you pick a bank that you feel you can get a loan from someday in the future, in the process, like 3 or 4 years down the line, and maybe get your own banker's acceptance or line of credit as you go through. The international banking system is huge, and they can have an impact on an entire country's economy with just a single change that they have out there. So you'll see the World Bank out there, it lends most of its money to less developed nations. They have some awesome programs. Normally, I bash a lot of government agencies because I'm skeptical and cynical about their motives and their process, but the World Bank's done some great things. They have a program called microloans, where they're loaning $100 to $200 to burgeoning business people. You know, to us, that's pennies. That's nothing in the United States economy. But if you're a poor farmer trying to set up a business, trying to sell things on the streets of India, that $100 or $200 can mean you buying equipment to sit down and supply your stuff and become a vendor to sell product to other people. And that could be a life and death. It could be a huge shot in the arm. So the World Bank does a lot of really positive things in helping developing countries become more than just developing, moving up into upper tier countries by improving the wealth of its citizens. You also have the International Monetary Fund. They want to get people to get along and, hey, let's all get along. Let's all have same policies. Then let's go have lunch together. They really want people to go around and get along between countries. So they really get involved and they try to stabilize the exchange rate from one national currency to another. There's 189 countries involved with it. So it really is a worldwide system. So know what the World Bank is. Their main function is to lend money to less developed nations, and also the IMF, the International Monetary Fund, they have cooperation between countries. And of course, there's people that protest their policies, and primarily because they're big and they deal with things across the entire planet when it comes down to it. So you'll see that aspect out there a lot of times in the papers and the news media and everything else that we come across in daily life. So I want you to know a couple of things. Know what the different aspects, know what the FDIC is, know what the NCUA is, and those are really insurance policies for different parts of the things that we put our money into. Know what the World Bank is, International Monetary Fund, RFID chip. You don't have to know that's a radio frequency ID. You don't have to know that, but know what that is because it's a chip in your credit card, and know especially what the electronic fund transfer is, and all things the debit card as you go through. Use the banking system, but use it wisely. Take care.